Unsurprisingly, the video conference between European heads of state failed to reach an agreement on the 2021 to 2027 budget and the €750 billion stimulus package. Basic divergences of opinion between the northern so-called Frugal Four countries and southern states, with France and Germany as umpires, concern the same points: the grant-to-loan breakdown, allocations, conditions in the stimulus plan and overall amounts, and whether or not to maintain budget rebates now that the UK is leaving the EU. Talks will resume at a summit in July. In the US, Donald Trump spoke at a campaign meeting and essentially tried to find scapegoats. Democrats and China are still the main targets. And yet, China confirmed that it was upping purchases of US agricultural products and wanted to respect their agreement. Donald Trump's opinion poll rating fell below 40% for the first time since 2017. This weakness makes him all the more unpredictable on the international scene as he looks for issues to rally his supporters. Hence his fresh threats to tax Canadian steel and European industrial product imports. The news sent the auto and chemical sectors sharply lower. But the focal point over the week was the worsening sanitary crisis as new cases increased sharply in the US, Brazil, and India. Only China managed to send a reassuring message. Its new lockdown measures appear to be stopping a new cluster spreading in Beijing. Economic growth is likely to be affected by problems in getting the epidemic under control. Meanwhile, U.S. weekly jobless claims came in at 1.48 million, a slightly disappointing figure. Continuing claims stagnated at 19.52 million. Even so, Europe's advanced PMI for June confirmed that activity had re-accelerated once the lockdown was lifted. In the Eurozone, and particularly in France and Germany, the data was markedly better than expected. The composite index came in at 47.5 compared to 31.9 in May and expectations of 42.4. In France, it even rose to 51.3, which is expansionary territory, up from 32.1 in May and better than the 46.3 expected. We should, however, treat the figures with caution as PMI data are sequential. The big rise in June was due to restaurants reopening and mobility restrictions being lifted. On an annual base, the figure was still down 12% in June 2019, according to INSEE. High-frequency mobility data also rapidly improved. Restaurant reservations, according to OpenTable, are already back to pre-crisis levels in Germany and are halfway back to normal levels in the US. The number of car journeys is now, in fact, even higher than pre-crisis levels in Europe as people avoid public transport. Mobility data has been a strong market driver, but the trend should lose steam in coming weeks. Risk appetite over the week was hit by fears over a second coronavirus wave in the autumn. Central banks are still in play and economic indicators are improving, but a Democrat leading in the U.S. election polls could worry investors and equity market valuations are steep. We remain neutral on equity exposure. In a very volatile week, equity markets were torn between generally upbeat macroeconomic data and fresh coronavirus worries. Economic data in most regions beat expectations. The latest PMI reading in the Eurozone actually flirted with expansionary territory. France's manufacturing PMI were particularly good, but after some easing in U.S.-China tensions at the beginning of the week, it was the turn of U.S.-European relations to put pressure on indices. Washington is reportedly planning to impose $3.1 billion in new import duties on goods from France, Germany, Spain, and the UK. Elsewhere, SEB said the pandemic's impact on its accounts would be less serious than expected. Management now sees a $200 million loss in the second quarter, down from $450 to $500 million previously announced. Operating results are now expected to be in the black thanks to cost-cutting initiatives. In the airline sector, which has been particularly savaged by the epidemic, a Franco-Dutch agreement is imminent and Amsterdam could contribute $4 billion to the Air France KLM rescue package. Lufthansa shareholders agreed to a €9 billion rescue plan. EasyJet's half-yearly loss was heavier than expected and the group is to have a rights issue. Trading was suspending in Wirecard after the company entered bankruptcy proceedings. U.S. indices edged lower, but the Nasdaq hit another all-time high last Tuesday. News that New York had introduced new quarantine measures for visitors from other states triggered concerns that the U.S. recovery had got off to a false start. Once again, cyclicals bore the brunt of the selling. Coronavirus statistics are, for the moment, overshadowing improving macroeconomic data. There was little news from companies as we approach the end of the second quarter. Nike said its losses were due to store closures and a 50% plunge in deliveries to wholesalers. Increases of capital continued to pull in investors. American Airlines raised 3.5 billion euros in an equity-to-debt deal. The Fed eased banking regulations and said major banks could maintain dividends in the third quarter. However, they cannot increase them or launch share buybacks. This is arguably a reassuring pointer to the U.S. banking system's solidity, but the Fed will be keeping a closer watch and could toughen its stance if the economic situation were to worsen. Japanese stocks fell, leaving the Topix and Nikkei 225 down by 1.32% and 0.97% respectively. Restriction on people's mobility and business was eased further from June 19th and activity rose. For example, sales of furniture and home living goods were strong since people are spending on goods to make living at home more comfortable. The MSCI emerging markets edged 0.3% higher last week, as at Thursday's close, as India, China, and Russia outperformed other regions. In another development in the U.S.-China tech war, the Pentagon listed 20 companies related to the Chinese military, including China Mobile, China Telecom, CRRC, and Hikvision. Elsewhere, GDS is said to be looking for a Hong Kong secondary listing, and AIA won approval to convert its Shanghai branch into a wholly owned subsidiary, a development which may substantially deepen AIA business penetration in China. Well, that's all for today. Thank you for watching. Subscribe to our channel to track the market pulse and get the latest economic data. Good luck trading.